What's up, YouTube fam? This is Joel with TruLife Investing. Hope you're having a great day today. Don't forget to hit that subscribe button, hit that like button to help out the channel. But today we're going to talk about strategy. So one thing is to think about is you would never go into a business without having a business plan. You would never go into a football to play a football game professionally without having a plan, without having a strategy of how you're going to win. And that's one thing that we have to think about whenever we're going to investing. We have to have a strategy, because without one, we're going to lose. We can't just go into the account, pour money in, and pick any stock that's out there and then just hope that it grows so that we can get some gains and that we can make some money. That's not how it works, and you will lose every single day. But if we go in with a strategy, then we know that we've set limits on what we're going to do, how much we're going to purchase, when we're going to sell. Then we can make sure to have something to fall back on so that we're not going outside of our limits. And that is the one thing that I'm learning as a new investor that everybody needs to have. Because just like whenever the whole stock market is moving forward, everything's going green, there's gains for every single company, everybody's making money, everybody's great, everybody loves it. But then whenever the stock market goes down and everybody's losing money, well, how are there still people that are making money, that are still getting those green days whenever the whole stock market's red? That's where strategy comes in. So one of the things that I'm going to talk about today is, as being a new investor, not having at least $25,000 in our account. So the PD2 rule is applied to us. So it means that we can't make more than 3-day trades in one single day without getting penalized. So we have to make sure that we follow that rule that's in place. But the strategy that I'm going to be moving forward with is purchasing within an hour to an hour and a half before the market closes, and then selling the following day within 30 minutes of the market opening. And then when it comes to my limits, so whenever you're purchasing a stock, before you even purchase that stock, you need to know, okay, if I purchase this stock for 30 shares of this stock for $1, so that's $30, how much am I willing to lose before I sell it? And how much am I, if I gain, where am I gonna stop? Because you have to remember that whenever we're dealing with penny stocks, and because we have to swing trade, which means, you purchase your stocks one day and then you sell them another day, most likely the next day, that with these penny stocks, they're very volatile. So things change very dramatically, and they could be at $2 one day, they could be at $10 the next day, and that's what we love. That's great. But then what if it's the other way around? What if they're at $10 today and then tomorrow they shoot down to $2? So we have to make sure that we have a strategy in place so that we're not trying to reach for the heavens, but we're trying to get in there, get our gains, and then get out. We don't want to overstay our welcome. So one of the things that you have to look at is, okay, don't say, well, whenever I purchase these stocks, I want to make $5 on every set of stocks that I share, that I purchase. That doesn't make any sense. You have to start thinking in percentages, because you could have $1,000 worth of stocks. Well, $5 isn't really that much. Or you could have $10,000. Well, you can't measure based upon a single dollar amount. So you have to think of in percentages. So with dealing with penny stocks, they can be very volatile. So when you think of a penny stock being able to grow 10, 15, 20% in one day, that's possible. And so we think of, whenever we're trading, that whenever we purchase a stock and if it grows 5%, we're going to cash in and we're going to get out and then move on. Because like I said, with penny stocks, they can just go up and down within a moment's time. There is people literally out there that will be able to do what they call a pump and dump. So they will pump up the stocks, put $2-3 million into these penny stocks, pump it up, and then everybody sees all the action going around. They see the stock that's growing so fast, and so they start putting in their money. And then whenever everybody else starts putting in their money, that one person that pumped it up with a lot of cash flow, that they pull out, make their money, and then the stock drops. So that's one thing we have to be careful of, because remember, when dealing with the stock market, we're not just dealing with our city or even our state, we're dealing with our country, we're dealing with worldwide. The amount of people, there's millions of people that are looking at the same stock market, the same numbers, the same companies that you are. So you have to be careful in knowing that things can happen, crazy things can happen. And so that's why we have to have a strategy of, for our strategy that we're going to be moving forward with is, if we get to a negative 10% on our stocks that we've purchased, we're going to get out. We're going to cut our losses and we're going to get out. If we gain between 5 and 10%, and it's the next day, then we're going to get our gains and then get out, not overstay our welcome. So one of the things that I'm thinking of is that we're waiting for it to pop up, and then we're going to purchase it the previous day, wait for it to pop up, and then sell off. Now, with last week in our trading, the whole stock market went down. So both of the sets of stocks that we had purchased on this account went down big time. And so, like I'll show you right here. So if we look at MFA over the past week, the stock went down. And then if we go back to TTOO over the past week, this is where it went down. But then it started picking back up, so that was a good thing. But we want to make sure that once we get between 5 to 10% of growth on that stock, that we're going to get on out of there. We want to continue to get those green days. We want to continue to make sure that we're not losing, that we're staying positive. We're getting those great positive days to offset those red days that we know are going to happen in the future. But please, if you are new to investing, if you have jumped in, created a RobinHood account, which, by the way, the link for my RobinHood account is down below. If you use my link, you'll get a free stock when you sign up for an account, and then it'll help me out to get a free stock, so we both benefit. So I really greatly appreciate it if you did that. But one of the things we have to look at is that if you're new to investing, you just make a RobinHood account or any other account with any other brokerage firm, that you have a strategy in place. You should not put your real life money, the money that you work hard for every single day, into something where you could potentially lose it all without having a strategy. So remember, number one rule with investing is make a strategy, know your limits, know what you're going to do every single day, be consistent with it, and you will see your account grow. This is Joel with TruLife Investing. Have a great day. Don't forget to hit that subscribe button. Don't forget to hit that like button. We really appreciate all the help and support. If you have any comments, leave them down below in the comments section. Can't wait to give you some more tips and tricks that I'm learning as I'm growing with this investing account. Like I said, I started off from scratch. This is TruLife Investing. We're not pulling any punches as far. We are not trying to show anything that's not true. We're in full transparency. We're going to make sure to show that from literally nothing, we're going to grow this account to things that we've never imagined it could be. But really appreciate all your help and support, and we're going to bring more videos like this in the future. Have a great day.